Hey everybody, welcome back to Alpha Cave. Today we're going to talk about when the price of your stock drops significantly. What are the things that you can do? We're not financial advisors here, but over the years there's several things that we've done to kind of help ourselves so that we can get back to the position where we were or actually be profitable. There are certain apps that I do use. MarketBeat is one website that we use. We use NASDAQ and of course Robinhood. With those, you can pretty much get all the news you need, all the information coming out from the companies and the prices and the ratios that you need to evaluate the stock with. So those are the three things that I usually use to kind of do an evaluation. So the first thing you want to do is evaluate why your stock dropped in price. So in that case, you want to look at all the news. Was it something that it was just a negative event that happened? Was it something of a bad quarterly report? Is it something that the company can come back from or not come back from? That's very important so that you can continue looking further at the stock to see if you want to continue with it. Next is reassess your position. Did you buy this on potential, or did you buy this because it was truly a strong company? That's where the earnings come into play, the quarterly earnings, the financials of the company, which I usually look at those on NASDAQ. NASDAQ is very nice to look at the earnings, the financials. It's put out in charts very simply so that you can just evaluate that real quick, see if the trend of what they're earning is going up, going down, or going negative. It's very important to know if it's something that the company was doing fine and now suddenly it's negative for whatever reason, then maybe you have to reevaluate your position in that stock. Once you determine that this stock is something that you really do want, then you may want to start to dollar cost average down on the price of your stock. So start buying more and more and more. If it's something that you truly believe that is going to be beneficial for you, that to keep the stock is going to be a good thing and it's going to come back in price, then keep on bringing down that price. I've done that with a couple of companies. I did that with RITM, R-I-T-M, which is Rhythm Capital. And I also done that with Disney and brought down the price as much as possible so that at a certain point you start being profitable a lot sooner. Now, I have found that to average down your price, it's much better to do it by selling put options. That way, the stock is already at a low price, and then you're going to sell a put to say, I want to buy the stock at this lower price, so pay me some money so that I can buy it from you at this lower price. And if it reaches that price, then you end up getting 100 more shares of that company. That's a great way to do it. Now, if you're not going to buy 100 shares together at once, then just kind of buy them, setting limits on how much you would pay for it. That way, if you always have a limit there, you're always going to pay that amount or less, which is perfect. And you keep on buying more shares that way. But if you do it by options, it is really, I think, the ideal way to do it because you save more money, plus they're paying you money to buy the shares. And that's a perfect way to dollar cost average down. Now, if you do have 100 shares or more and you want to sell call options on these shares, be very, very careful, because it's always best to sell call options when the price of a stock is nice and high, where you're actually making a profit. Now, if the price is low, you have to be very careful. You have to think, is this price going to go up fast or is it going to come up very slowly? If it is, then maybe you can sell some call options for very short periods of time at a higher price, and then hopefully that expires, and then you keep on doing that so that you can make some money back that way as well. The last thing is, if you determine that this stock is something that is good for you to keep, you looked at the financials, you looked at the news, you determined that this stock is nice and strong, it's a good, strong company, then what I would do at that point is go on ahead and be very patient. Keep building up, sell your puts, sell your calls, keep on building, try to make as much money from it as you can, and then slowly but surely just wait for that price to come back up to where it was before. Investing in the stock market could be a lot of fun. However, it can also be stressful. But hopefully, if the price drops on one of your stocks, going through this checklist and determining whether it's a stock that you want to keep or you want to get rid of will help you a little bit more. Guys, thank you so much for joining us. I'll talk to you later.